Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates, and these boards are going to clear as I'm talking to you, but don't worry about it. I'll get to this for you. Today is Tuesday, and it is the 14th of November, 2017, about 4:45 p.m. Another correction day in the stock indices, but I want you to understand, with all this correction, most of what's happening is just taking the market back to the 18-day average of closes. At 4:45, our charting services clear the boards as the gateways for trading session beginning at 5 p.m. Central Standard Time on most Globex markets reopens. Not all of them, but most of them. When we come to the S&P on a weekly area chart of just closing prices, market's still going up very nicely. In fact, you would say, okay, you're down for the week, 1.5 points. You wouldn't know that with all the noise of the press, and if you're watching things going on, especially the Senate hearings right now, unbelievable. Jeff Sessions, if you heard that hearing, but still very much in an uptrend on a closing basis. When you come to a daily area chart of closes, you can see a little more. The market's in a corrective mode. Looks like it wants to head back to this 18-day average. My theory, and it's mine, I can't tell you that I'm right or wrong, but I teach it in my charting course and I believe it, and I've learned it over my decades of trading, is markets like to go back to neutral points to regroup. And chartists as a whole like to look at moving averages. It's a common number. Now, do they have to look at the 18-day? No. They might look at the 19, the 20, the 21. Everybody does their own little thing. I've even seen services that try to optimize. Should you use in this market the 18? It's better to use the other. I've tried all that. I found it not worth the time and effort. That doesn't mean it's not good. Doesn't mean it's not better than what I do. I just have my own opinion. So I'm seeing the market in an overall what? The bias is up because you're over the 18-day moving average of closes, but you're in a corrective mode right now. You see that on the charts fairly clear. And here's what I'm noticing on the chart. If you stand back and you were to take the name off the chart, you would say, gee, the market keeps trying to thrust down and it doesn't go anywhere very big on those thrusts. It seems to come back up. That's the observation I'm making on the chart. When I look at the swing lines, which are the brown lines, all I've done is take this chart and put these on it. There's no trend. What you have is a high that took out a previous high and break lows that have taken out previous lows. The market has now succeeded after this down day from right here, and I'll go back to it, of not taking that day's high out 2 sessions later, within 2 sessions, which means we have a form of a trade top in place. I then put moving averages on. I want you to look at this 18-day average. And on these thrusts that we were showing, look how the market seems to go to them, and that's where it's trying to get its footing. Will one of these times that fail and the market won't be able to grab its time? As sure as I'm talking to you, it will one day. I don't know that day, but it will happen. Right now what the chart is saying, as I interpret it, is you have a higher high, a lower low, no trend. You basically have some upside bias because you closed over the 18-day average of closes. The market is finding resistance on spike moves to the upper Bollinger Band. And remember, the Bollinger Band theory is the market will trade within the bands 95% of the time. That does not mean it can't push the band out. Excuse me, the most obvious thing is so far we haven't hit a lower band in a very long period of time. The most we do is slide slightly through, so far at least, the 18-day average and then come back up. That doesn't act like a bear market, not yet. Momentum has turned down. When the momentum turned down from being what we called embedded, it's when the red and the blue lines are staying over 80 for at least several days in a row. When that momentum is lost by the red line closing underneath 80, you often get a move back to the 18-day average. Can it all happen in one day? It basically did right there. So the answer is yes. So what I see the market doing is trying to put on its balancing act, try to figure out where it's going next, and what it's doing is either forming a top or another base to move higher. But it's spinning right in here now, and that's the danger. You're not following through to the downside, but you have no reason to really be a super buyer if you're looking at trends. Difficult market. The NASDAQ joined the parade of losing the upside swing line when the pattern turned down, lower highs, lower lows. However, unlike the other charts, it is kept what we call that embedded reading. So I'm going to say that the bulls are still in control of the market because you have the upside bias, and the swing line is not as important as the slow stochastics. In the hierarchy of signals, I consider this the most important. Does this mean it's a screaming buy? No. It also means it's not a sale. When you come to the Dow came down, and unlike the other indices, when's the last time you saw us hit a lower Bollinger Band? It's been a very long time. So there's a weakening taking place. Is that weakening because of GE, the talk it's going to be taken out of the Dow and prices in a free fall in it, so to speak? Could be. You've got lower highs, lower lows. You went to the lower Bollinger Band, hit it literally by one tick today, and then turned back from that, coming back up off those lows 150 points. That's nothing to sneeze at. It's fairly important what it's been doing. 23,231 was the low, 23,375 is the close. Fairly impressive. And the way I teach charting, when you hit an upper Bollinger Band the first time or the lower band the first time, that's where I think pros are taking some money off the table. Doesn't mean you can't hit it and keep going down. Eventually, out of sideways action, you got to push out one way or the other. What's the obvious conclusion here? You got sideways action developing. You're spinning right now as all this tax talk is taking place. Where's the bear part of the market? And there is a bear part of the market. It's in the Russell. Lower highs, lower lows. You came from this sideways action and you're pushing on it, and I've been saying this is the weakest part, and one of the things I've asked in these videos of you is this going to be the market that pulls the other markets down, or are they going to be strong enough to, if you will, abbreviate the decline in this market? Could this market make a run to the 100-day average? Yeah. It's a 1442. You're at 1469. I mean, it's still a good size move. But yes, is it oversold? Absolutely. But this is called riding the lower Bollinger Band, and that's bearish. That is not bullish. In the VIX, each time we've spiked up over the upper Bollinger Band, you take a look, that market is pulled back pretty fast. This was no different today. But you have upside momentum. You're in an uptrend. You have higher lows, higher highs. The support of the market is on breaks. So the volatility is doing two things. It's pushing out, widening for the first time in a long time. I know people say there's no volatility. Not true. If you're measuring it here, you're seeing it. What about that Dow move today? You're getting volatility into these markets again. In the T-bonds, you have no trend. You have a higher high and a lower low, and this is what I was saying. Markets often, not always, but often like to figure out what they're going to do from that 18-day average of closes. That's what I'm seeing going on. It is fighting a battle. As the curve yield is seeing the short-term 2-year notes climb up to, 169, and we're looking at the bonds and the 10-year notes slipping down in yields a fraction. The flattening is going on. Is that flattening a warning for the stock market? History says it is, but history is history. You know, if you go by past history to judge a future result, I can tell you in this bull market in stocks and interest rates, people are laid out. They haven't been right. I watched the chart, and the chart action is saying neutral right there. The 10-year note has higher lows, higher highs. You're under the 18-day average, so you negate the bullishness of the swing line. Momentum is still pointing down, and that goes with the downside bias. It's not trending. In the dollar index, the market is in a downtrend. Not what people are saying. I'm not buying that it's in an uptrend. I define a downtrend as lower highs, lower lows. You have that. You're under the 18-day average. You have that, so the bias is down. Momentum is down. Support comes in, the combination, I think, on the chart, the 2 points are 93.45 Actually, they're both about 93.45, the Bollinger Band 100-day average. You'd have to take out 94.54 under this pattern to negate that bear trend at this point. In the euro currency, you're in an uptrend, and it was confirmed last night. Now, here's what you looked at coming into the evening. If the market takes out this day's high right here, that one of Friday, you would have then a pattern of higher highs, higher lows, assuming that's not taken out, and momentum is trying to turn up. It's exactly what occurred. Let's go back to this. If you run, one of the numbers I'm looking for resistance would be the closest of the moving averages if one's above it, and in this case the 100-day averages, I've got it plotted here, and then the Bollinger Band. And that's basically what this market's trying to do. When you come to the Aussie dollar, now the question is, can you embed? What do I mean by embedding? It's when you get a conversion of the momentum from a slow stochastic to converting from oversold to locking in a bear trend, or overbought, locking in a bull trend. And it takes these numbers to stay under 20 for several days in a row. And you could have that tomorrow. Tomorrow's the key day in the Aussie. Several days, not a couple. Grammar is different there. So to me, tomorrow's a very important day in this. This market actually held up very well considering the slowdown in China that I reported in my consultancy letter, my market research. So I think you'll find that interesting if you have access to it. In the end, we still have bullishness. And if you saw, about 3 in the morning, I was up watching the conference out of Frankfurt, Germany, as the central bankers were talking. The Bank of Japan, you had Deutsche Bank there. I think you had the Deutsche Bank. You had for certain, you had Mr. Draghi there, Janet Yellen was there. You know, there was just a host of people speaking. And this market is still looking good, and the Japanese are committed to letting inflation overshoot. And will that be bullish or bearish on their market? They're throwing the kitchen sink, and they have been for years, trying to get inflation back. Who knows? But right now, the trend is up. If the market rallies, maybe it gets to the upper Bollinger Band battleground. That's what you're at, the 18-day average of closes. Then we get to the Brent versus the WTI oil prices. This is the first settlement where you are underneath that 18-day average of closes. You haven't done that in months. Is this a top? Could be. What happened today? Well, if you had my consultancy letter, again, what's going on there is I was talking about the difference between the IEA, the International Energy Association, versus the OPEC outlook. And now they're starting to rather dramatically differ on the amount of demand. I wonder if price getting up in WTI to the low 60s, getting up to $58 in the WTI. So Brent, I said it wrong, low 60s, WTI 58. Maybe you got high enough where that's going to change some of the outlook. But in any case, as you can see, lower highs, lower lows, headed towards that 18-day average from the looks of it. I'd be very surprised if this market doesn't hit it after seeing the API numbers. And you can see in the January WTI crude, you got down today to 54.98. 5,500 is the 18-day average. You have to admit, when you lose that embedded reading, it's like a magnet, that number, and we'll see if the market does anything from there. Gasoline, you lost the embedded reading, right to the 18-day average, finding support temporarily. And in the nat gas, the weather is so mild that people are wondering if we'll get that big winter draw that we normally get. But you have to say, you went from 285 to 323, so to get a pullback of a third to 50%, not out of the cards. The first challenge of the 100-day average often, I wish I could tell you always, I can't, often doesn't hold. And where'd the market pull back to? That center line, trying to figure out what to do. Guide to Technical Indicators. This is a 2-pamphlet PDF we have, volumes 1 and 2. Talks about the oscillators, Fibonacci numbers, Gann numbers, ideas on everything. How do you get it? Call us. Go to our website. You'll see a free offering of it. Click up here if you watch me on YouTube, or underneath us. If you click here, it says click here for Ira's free information on many of the websites. Do so, and the forms will appear there. I'm tired of talking. You have a good day. I'm Ira Epstein.